Assalamualaikum warahmatullahi wabarakatuh. Good morning, everyone. My name is Meutia, and today I will make a presentation about analysis of financial leverage, return on equity, and operating cash flow on earnings per share in property and real estate companies listed on IDX during 2016 to 2020. Okay, for the first slide is about research background. Our companies certainly need funds for their operational activities, investment activities, or other things. These funds generally come from internal sources and external sources. One of the common places to look for external funding is the capital market. Companies shall do an initial public offering or IPO before they sell their securities to people who have access wealth called investor. Before doing an investment, investors certainly need to assess the value of company shares, which can be done by analyzing their financial statement. Investor can try to use fundamental analysis for it. Fundamental analysis can be used by calculating the ratio of the company's financial statement. One of the important financial ratios for investors is earnings per share. EPS can also be used as an indicator of how great the company's profit in an accounting period. The first factor that can influence EPS is financial leverage. Financial leverage can increase the value of the company when used efficiently, but can also be a boomerang when the expenses are higher than the income. Investors also shall. The next one is return on equity. This ratio shows the efficiency of the use of company's own capital. If the management uses the capital optimally, it will generate greater profits. The next one is investors also shall take a look at operating cash flow. If management was able to utilize operating cash flow effectively, it will provide benefits for both the company and the shareholders. During 2016 to 2020, the government issued several policies to boost the property and real estate industry. Among them are policies regarding to loan-to-value or LTV, Article 22 income tax and sales tax on luxury goods. The first policy regarding LTV was published in 2016, which has been written in Bank Indonesia Regulation number 18/16/PBI/2016. The second one was published in 2018, which is stated in Bank Indonesia Regulation number 20/8/PBI/2018. The latest one was in 2019, which is stated in Bank Indonesia Regulation 2021/13/PBI/2019. As for the policy for Article 22 income tax and sales tax on luxury goods, both were published in 2019, where the sales tax on luxury goods policy was written in PMK number 89/PMK.010/2019, and for Article 22 income tax policy was stated in PMK number 92/PMK.03/2019. The next one is about research questions. The first research question is, does financial leverage significantly influence earnings per share in property and real estate companies listed on IDX during 2019 to 2020? The second one is, does return on equity significantly influence earnings per share in property and real estate companies listed on IDX during 2016 to 2020? And the last one is, does operating cash flow significantly influence earnings per share in property and real estate companies listed on IDX during 2016 to 2020? Right, the next one is research purpose. The first research purpose is to determine the influence of financial leverage towards earnings per share in property and real estate companies listed on IDX during 2016 to 2020. The second one is to determine the influence of return on equity towards earnings per share in property and real estate companies listed on IDX during 2016 to 2020. The last one is to determine the influence of operating cash Flow towards earnings per share in property and real estate companies decided on IDX during 2016 to 2020. The next slide is about research objectives. The first objective is for the researcher. It can give more insight and knowledge to the researcher. The second one is for the investors. It can help investors to be able to assess the company. The third one is for the company. It can be used as an additional information which may be useful on decision making. And the last one is for other users. It can be used as a reference material and source of information. Also can be developed by the next researchers. The first grand theory that will be used in this research is signaling theory. Signaling theory explains how a manager who have more information about the company gives signals to investors in various ways, one of which is through financial statement. In one hand, in 119, one in one hand, in 1973, Spence wrote Job Market Signaling, in which he used employee recruitment to explain signaling theory. In this journal, investors are the recruiters and management are the applicants. Then in 1977, Ross wrote the determination of financial structure, the incentive signaling approach. This journal explained that companies who have higher leverage are seen as better companies than companies with low leverage. Management as the owner of the information will try as much as possible to convey it to investors, and investors must be more careful in capturing the signals given by management in order to obtain a return on their investment. The next theory is agency theory. Agency theory explains how the principal gave away the role of a decision maker to agents and ordering them to run the company in accordance to what the principal wants. Agency theory was created because of problems that arise due to the principal and agent having a desire to maximize their own personal benefits, and when the principal has difficulty knowing whether the agent is working in accordance with the principal's wish or not. Principals then try to control agents with compensation. If agents are able to meet the principal's expectation, they can get greater incentives and vice versa. This will make agents to be more careful while running the company. Agency theory provides that before doing an investment, investors shall consider the risks that will be faced by looking at management performance and stock price movements. Next, we will talk about the dependent variables, which is earnings per share. Earnings per share is the amount of profit obtained by shareholders on the company's earnings per share, on the company's earnings per stock that they own. The EPS is divided into two: basic EPS and diluted EPS. Basic EPS is the EPS derived from the results of distribution of net income by weighted average shares outstanding, which has been described previously. While diluted EPS is the EPS that affected by the use of price of convertible securities, options, or warrants by the shareholders. EPS can be used to assess company performance and company profitability. EPS is also often the most considered point when investing. The next topic is financial ratio. Financial ratio divided by 6. The first one is liquidity ratio. The next one is solvability ratio. The third one is activity ratio. The fourth one is profitability ratio. The fifth one is market value ratio. And the last one is coverage ratio. Let's talk about the first ratio. Liquidity ratio is used to measure company's ability to pay its short-term debt. Liquidity ratio consists of current ratio and quick ratio. The next one is solvability ratio. It can be used to measure the effectiveness of the use of debt in operational activities. It consists of debt to equity ratio and the debt to asset ratio. The next one is activity ratio. It also known as the efficiency and turnover ratio. It is used to measure the effectiveness of the use of assets. Activity ratio consists of receivables turnover ratio or the days sales outstanding ratio, ratio inventory turnover, fixed asset turnover ratio, and total ratio assets turnover. The next one is profitability ratio. It can be used to measure the company's ability to generate profit on operational activities. Profitability ratio consists of operating margin ratio, profit margin, return on equity, and return on asset. The next one is market value ratio. The ratio that can be used by investor when they want to buy or sell company shares. Market value ratio consists of price per earnings ratio and market per book ratio. And the last one is coverage ratio. It can be used to measure company's ability to pay bonds or other debt financing. It can be this ratio is consists of times interest earned. The next slide in this slide we will talk about the first independent variable is financial leverage. Financial leverage is an external source of funds used by the company for their operational activities. It has fixed costs that must be paid every certain period and intended to increase the company's net income. The decision of using financial leverage can be categorized as a form of gambling. Why? Because management certainly wants financial leverage to help increase their operational activities so that their incoming profits will increase as well as the earnings per share. However, when management fails to manage funds from financial leverage properly, the company will be faced with interests that are greater than the profits earned, so that both net income and earnings per share will be decreased. In his research, financial leverage is proxied by debt to asset ratio. Debt to asset ratio is a ratio that assesses how much debt are used for a company's asset. The next independent variable is return on equity. Return on equity is a profitability ratio that measures the effectiveness of the use of companies' own capital in their operational activities in order to obtain profits. An increase in return on equity indicates that shareholders have a stronger position in the company, which also means that management is able to manage their own capital effectively. The increase in return on equity also affects the increase in earnings per share and the amount of dividends received by shareholders. The next independent variable is operating cash flow. Operating cash flow contains of company's transactions related to income and expenses, which later will generate net income. It should be noted that the accounts classified into operating, investing, and financing will depend on the industry because each industry has different policy. Companies that are able to manage cash for operational activities properly can generate high profits so that it will increase the value of earnings per share. The next topic is about the previous research. Here I already some three of the previous research that I used. The first one is analysis of financial ratio and earning per share in construction companies in Indonesia. The second one is does earnings per share or EPS affected by debt to asset ratio and debt to equity ratio, and the third one is effect of firm size and debt to asset ratio on EPS with profitability as a moderating variables in property and real estate companies listed on the IDX. The first study The first research used the independent variable is debt to asset ratio, debt to equity ratio, total asset turnover, firm size, and institutional ownership. The population is construction company listed on IDX during 2013 to 2017. The analysis technique is multiple linear regression. The next research used independent variable is debt to asset ratio and debt to equity ratio. The population is basic industry and chemical company listed on IDX during 2015 to 2018. And the analysis technique is panel data regression. The last research use independent variable is firm size and debt to asset ratio. The moderating variable is return on equity, and the, the, the population is property and real estate company listed on IDX during 2014 to 2018, and the analysis technique is moderated regression analysis. Here is the theoretical framework. As you can see, the independent variable is financial leverage, return on equity, and operating cash flow, and the dependent variable is earning per share. The hypothesis is first, financial leverage has a positive and significant influence on earnings per share. The second hypothesis is return on equity has a positive and significant influence on earnings per share. And the last hypothesis is operating cash flow has a positive and significant influence on earnings per share. The next topic is about unit of analysis, population, and sample. The unit of analysis in this research is the organization or company. More precisely, is the property and real estate sector companies listed on IDX. The population in this research are property and real estate sector companies listed on IDX during 2016 to 2020. And the rest for the sample. The sample criteria. The first sample criteria is property and real estate sector companies listed on IDX during 2016 to 2020. The number of companies is 81. Next, the second sample criteria is property and real estate sector companies that publish financial reports and annual reports on IDX website or on the company website during 2016 to 2020. The companies that haven't published the financial reports and annual reports is 32. So we should eliminate the companies. And the third sample criteria is property and real estate sector companies that were on the listed did mergers or acquisition or moved to another industrial sector during 2016 to 2020. And the eliminated companies is 5 companies. Then the companies that meet the sample criteria is 44. Total companies data collected during 2016 to 2020 is 2020 is 220. The next topic is data collection technique. In here, I used to technique is literature study and documentation method. Literature study is the data collection method by conducting further analysis and the review on reference such as books, literature, and journals. For the documentation method is the data collection method by viewing, reading, and analyzing information obtained from previous related sources. The next topic is operationalization variable. For the dependent variable is earnings per share. The conceptual definition is earnings per share is a ratio that shows the amount of profit earned on one share of common stock owned by shareholders. The operational definition is EPS can be calculated by dividing net income with weighted average shares outstanding. The next one is independent variable, the first independent variable, which is financial leverage. The conceptual definition is financial leverage is a financing activity through debt that can be used by company with one condition that the company will be bound by the terms of payment of the loan and interest in a certain period. The operational definition is debt to asset ratio can be calculated by dividing total liability to total asset. The second independent variable is return on equity. The conceptual definition is return on equity is the ratio used to calculate the percentage of use of equity by management on the company's operational activities. The operational definition is return on equity can be calculated by dividing net income with total equity. The last independent variable is operating cash flow. The conceptual definition, according to PSAK number 2, revisit 2009, operating cash flow is an activity that becomes the company's largest source of income. It includes cash activities that are not part of investing and financing activities. The operational definition is cash flow to sales ratio that can be calculated by dividing operating cash flow with total revenue. The next topic is about the analysis method. In this research, I will use a multiple regression analysis. The first subtopic is about descriptive statistical analysis. Descriptive statistical analysis aims to provide general information that is important from the data used in the research, including the mean, standard deviation, variance, maximum and minimum scores, sum, range, kurtosis, and skewness. The next subtopic is classic assumption test. Classic assumption test divided by four. The first one is normality test, the second one autocorrelation test, the third one heteroscedasticity test, and the last one is multicollinearity test. Normality test is used to test whether the residual variables in regression model are normally distributed. Normality test can be done in two ways. It's either looking at the value of kurtosis or skewness or by the Kolmogorov-Smirnov test. The autocorrelation test is used to test whether there is a correlation between the confounding error in the current period and the previous period. Autocorrelation can be tested by the Durbin-Watson test. Heteroscedasticity test is used to test whether there is a difference in variance of the residuals from each independent variables. Heteroscedasticity can be tested by several types of tests. One of it is the Glaser test. And the last one is multicollinearity test that can be used to test whether there is a correlation or relationship between independent variables. Multicollinearity can be tested by color tolerance value and variance inflation factor. And here is the multiple linear regression analysis. Regression is a statistical method used to test the effect of one or several variables on another variable. To test the influence of several independent variables against one independent variable, the analysis method is multiple linear regression. And you can see in this slide of the multiple linear regression. And the last one is hypothesis test. In this, I will use three kinds of tests. The first one is coefficient of determination test. It will measure the ability of the regression model to describe the variation of dependent variable. The second one is simultaneous significance test. It is to test whether there is a simultaneous effect of the independent variables on the dependent variable. And the last one is partial significance test. It is to test whether each independent variable have an influence on dependent variable. Alright, this is the last slide of my presentation. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.